Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 384 on July 18, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on the AdvisorShares Trust Pure U.S. Cannabis ETF, SoFi Technologies, and Joby Aviation. And we discussed three new trades on Lithium Americas Corp, TeraWulf Inc, and Red Cat Holdings. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the markets finished the week nearly unchanged, moving less than 1% week over week. The Dow Jones Industrial Average lost 29 points, closing at 44,342 points. The S&P 500 index picked up 37 points, ending the week at 6,296 points. And now it's time for the topic of the week. The topic of the week is testing new things. Now, I have to admit, I don't always try new things out. I'm the type of person that finds something good and just sticks with it for a while. That might be a favorite restaurant, a new dish. That might be a specific route to drive home, or even a favorite t-shirt to wear. I just have favorite ways of doing things. You get the point. Today's topic of the week is a reminder that sometimes it's worthwhile to try something new. For the longest time, I preferred using three specific moving averages: the 10, the 20, and the 60-day or 60 period, the MACD oscillator, and Fibonacci retracement levels for my trades. Then I started using the Ichimoku indicator, which put way too many lines on my chart. I prefer simplicity over complication in general, and I realized that my favorite part of the Ichimoku was the 20-period moving average. I also have found that I prefer the RSI over the MACD oscillator. And when it comes to moving averages, I simply use the 20-period and the 60-period. The 10-period gave me too many false signals due to white noise. Now, this combination of moving averages and the RSI works for me right now. At some point, I'll have to try other indicators or strategies to squeeze out a profit. The whole point of this topic of the week is to remind you that there might actually be something better out there that will lead to more profitability. It's important to test out new things. It's also important to know when not to mess with things because they're working. However, if there's still room for growth in your trading style, then you'll want to be open to trying new things in order to keep improving and reaching the goals you have for your portfolio. So that's it for the topic of the week. Let's dive straight into review of last week's trades. We're going to start off with the covered call on AdvisorShares Trust Pure U.S. Cannabis ETF, symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. At the time, the stock was trading for $2.93 per share. I looked at buying stock and selling the August 3 call at 31 cents, hoping for a return of 12.97%, 13% basically in 5 weeks. Now, shares of MSOS had a down week, falling 18 cents to $2.54 per share. The call option we sold fell 14 cents, leaving us with a net loss of 4 cents on the week if we were to close the trade out immediately. The stock price is currently below the break-even point by 8 cents, but the drop in the price of the call option has limited the overall loss on the week. And that $3 strike is still the first out-of-the-money strike for the call options listed. So on Monday, the 2.5 strike might be listed. I'm not sure. Even so, I'm not a fan of making any adjustments on this trade at the moment. Sure, you could close the trade out for a 4-cent loss, but even that seems a bit extreme with 4 weeks left until expiration, which means there's a lot that can happen. I'll keep track of this position over the next few weeks, definitely over the next week, and make a decision on whether to adjust it or just allow the stock to trade a bit more before giving up on the original outlook for this trade. Next up, we have the credit spread on SoFi Technologies, symbol S as in Sierra, O as in Oscar, F as in Foxtrot, I as in India. At the time, the stock was trading for $21.20 per share. I looked at selling the August 21/20 put spread at 44 cents. That could give us a maximum possible loss of 56 cents per spread. Well, shares of SoFi grew 62 cents, ending the week at $21.82 per share. The out-of-the-money put spread that we sold is still out of the money, which is great. This trade has worked out well so far. No adjustments are needed at the moment, but I'll definitely keep a close eye on the stock price through the end of next week. The company will announce earnings on Tuesday, July 29th, which is only a week and a few days from now. We've seen the price drop after previous earnings calls, and that could turn this trade into a loss. So I'll consider closing this one early if I can lock in a profit before that earnings call. Or I'll wait for the earnings call and see what happens in the aftermath. There will still be 2.5 weeks left to trading after that call, so it might not have much of a negative impact on the trade at all. It's something to consider. For now, the stock is moving higher, which keeps us making money. No adjustments are needed at the moment. Our final trade from last week was a debit spread on Joby Aviation, symbol J as in Juliet, O as in Oscar, B as in Bravo, Y as in Yankee. At the time, the stock was trading for $12.01 per share. I looked at buying the August 11/12 call spread for 55 cents. That could give us a maximum gain of 45 cents, or that's an 81.82% return in 5 weeks. Well, shares of Joby Aviation jumped $5.76 per share, closing the week at $17.77 on Friday. The in-the-money call spread that we bought is now deep in the money. This stock had a great week. The price has jumped, which works out well for our spread. This stock also has an earnings call on August the 7th, roughly 1 week before expiration on August the 15th. That could affect this trade as well. So we'll have to keep an eye on the stock in the coming days and just see how it looks. It's working out so far. Keep an eye on the stock to make sure it's going to keep on working out, going in the right direction. For now, no adjustments are needed for this one. It's a nice trade. So that's it for the review of last week's trades. Today, July 18th, was options expiration for all July monthly options. All new trades on today's show will use the August 15th expiration for monthly options in the month of August. There might be better pricing of options on Monday when the 50-cent strikes are introduced, so always keep that in mind. So we'll start off with our covered call on Lithium Americas Corporation, symbol L as in Lima, A as in Alpha, C as in Charlie. The stock ended the week at $3.27 per share. I'm looking at buying that stock and selling the August 3/2 call at 25 cents, hoping for a return of 14.68% in 4 weeks. Now you enter this trade by buying stock for $3.27 and selling the August 3/2 call at 25 cents. This trade makes the most money if stock prices finish above $3.50 per share. The break-even price on this trade is $3.02 per share. In real terms, the stock purchase will require $327 and you'll collect $25 for selling the option. Next up, we have a credit spread on TeraWulf Inc, symbol W as in whiskey, U as in uniform, L as in Lima, F as in Foxtrot. Stock ended the week at $5.13 per share. I'm looking at selling the August 5/4/2 put spread at 21 cents. That could give us a maximum possible loss of 29 cents per spread. Then you enter this trade by selling the August 5 put at 51 cents and concurrently buying the August 4/2 put for 30 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $5 per share. The break-even price on this trade is $4.79 per share. In real terms, you'll receive $21 per spread that you sell and have $29 at risk. And then our last trade on the week is going to be a debit spread on Red Cat Holdings, symbol R as in Romeo, C as in Charlie, A as in Alpha, T as in Tango. Stock ended the week at $11.27 per share. I'm looking at buying the August 10-11 call spread for 60 cents. That could give us a maximum gain of 40 cents, or that's a 66.67% return on capital in 4 weeks. You enter this trade by buying the August 10 call for $2.15 and concurrently selling the August 11 call at $1.55. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $11 per share. The break-even price is $10.60 per share. In real terms, you'll pay $60 to enter the spread, and your maximum gain is $40 per spread. So that's it for the trades on this week's show. I know it's summertime. It's been a little busy. People are traveling. I can see that in the listenership. So for those of you who are listening to me on the road or just before going out to Disney World or wherever you might be with your family, thank you for listening. I love seeing the numbers. I love getting the emails too. So keep reaching out. I'll keep responding. You guys are amazing. Have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.